Taoiseach, even before the Russian invasion of Ukraine, we had spiralling inflation, spiralling cost of living increases. When I was briefed by the Department of Finance, but maybe you could update us on this, they said that the war in Ukraine, the impact on energy prices, was going to add another 4% on top of that in terms of further inflation. So maybe you could confirm that. But I want to ask, in relation to that, when workers, public servants, who you are the employer of, are limited to 1% increases, that means that the people the government employs are going to be suffering very significant wage cuts over the coming period. Do you think, in that context, we need to revise that and give pay increases to public and civil servants, and indeed all workers, to compensate for the spiralling cost of living, but particularly the ones that this government employs?
In respect of Deputy Boyd Barrett's points around spiralling in inflation, yes, prior to the war in Ukraine, but again, security-related issues and issues in relation to the management of oil stocks and in terms of the release of oil and gas from Russia, all had an impact along with the pandemic in terms of economies coming out of the pandemic, an imbalance between supply and demand. Demand rose dramatically as societies emerged from the pandemic. There was an inability to meet that with supply, and inflation occurred. So it was 5.7% in February. I can't confirm what you're saying right now, that it will be 8 or 9%, but it could, and given what's happened in Ukraine, it's likely to increase. And you're familiar with the price of the barrel of oil now. On the international markets has gone from $96 on the 25th of February to about 130 today. So that shows how international and global this problem is. And likewise with the UK natural gas and wholesale markets is now trading at around 5.70 pence a therm today, near record highs after prices more than doubled last week. This day last year, gas cost 45 pence a therm. And in terms of wages, the latest CSO data on wages show that average hourly earnings in Q4 2021 were up 2.6% from a year earlier, and were up 8.2% from Q4 2019. The average annual CPI inflation was plus 2.4% in 2021 and minus 0.3% in 2020. Now we do, and as I say, we're actively considering the situation right now because of the war in Ukraine. We already took measures only a couple of weeks ago in terms of $500 million of measures, in terms of the electricity rebate, in terms of the wages, in terms of the DPS threshold, in terms of transport charges being reduced from the end of April, benefiting 800,000 users, and also in terms of the fuel allowance lump sum payment of 125, which will be paid to 390,000 recipients. So those measures will have impact, but government is giving active consideration to the current situation arising out of the war on Ukraine and its impact on oil prices.